Hello, welcome back to Learn Economia. In this video, we are going to look into the business of banking and bank balance sheet. What is a bank? As we all know, bank is a financial institution that is licensed by law to accept money from different enterprises such as individuals, firms, etc. And also the banks would lend money to these entities. Banks are open to assist mass individuals, enterprises, etc. So it is open to people as well. In order to use the banking services regularly, it is open to people, and they are formulated by federal and state laws on the basis of coordination and the services they provide. So in the case of a nation, it is actually controlled by the banking operations are controlled by the Reserve Bank of the country, and the central bank of a country. And in the case of India, the Reserve Bank of India is acting as a central bank of central bank of India. In the case of US, we can see that it is the Federal Reserve that acts as the central bank of US economy. Now, what are the functions of banks? Banks would accept deposit. It would receive money from individuals and enterprises who are known as depositors. Then it would dispense payments. It would make payments according to the convenience of depositors. For example, honoring a check and all. Then it would make collections. Bank would play a very important role. It would play the role of agency to collect funds from other banks receivable to the depositor. For example, when somebody pays through check drawn on an account from a different bank, the banks will act in such a manner to carry forward all these procedures related to this withdrawal of checks and all. Then it would invest funds. It would help in contributing and spending money in securities for making more money. For example, mutual funds. Then it will safeguard money. A bank is considered to be a safest place to store your wealth, including your jewelry, other assets, etc. Then it can maintain savings. The money of depositors is maintained and the accounts are checked on a regular basis. Then it will maintain custodial accounts, which are the accounts maintained under the supervision of one person, but this is actually for the benefit of some other person. And the bank would lend money, which is one of the important functions of bank. It will lend money to companies, depositors, if there is some emergency. Just understand two functions of bank in detail, which will help in the banking operations and banking business. The most important task of commercial bank is to accept deposit from the public, and we know that banks would maintain and keep records of all the demand deposit accounts of their customers, and it would transform the deposit money into cash. So this is possible as per the requirements of the customers. Technically speaking, demand deposits are accepted in current accounts, and the depositor can withdraw deposited money anytime by means of checks. In the case of fixed deposits, the depositor can withdraw the money deposited only after a certain period. These are time liabilities for the banks, because the banks is liable to pay back these, especially in the case of fixed deposit. Okay, and deposits in the saving bank accounts are subjected to certain limitations regarding the amount one can receive and withdraw. In this way, bank would collect savings from people and maintain a reserve of these kinds of savings. Coming to the second important function of bank, which is giving loans and advances, which is considered to be one of the important functions of commercial banks. And this is out of the money through deposits of businessmen, entrepreneurs against permitted securities and safety like gold, silver, government securities, which are easily sealable. Easily stealable stocks, shares, marketable goods, etc. So it is out of the deposit that people, firms, government, etc. make in the bank, that the banks would take this amount to give loans and advances to the people, if there is people or firms or whatever it may be, if there is any kind of emergency. Bank would give advances to customers or depositors through overdrafts, discounting bills, money at call, and short notice. Then there would be loans and advances, different forms of direct loans to traders, producers, etc. There are different forms of loan available to consumers, I mean individuals, and also different forms of loan available to the firms, factories, etc. Coming to the concept, a bank's balance sheet. A balance sheet is actually an accounting tool, like that would list assets as well as liabilities. There would be two sides. One side would take care of assets, and other side would take care of liabilities. An asset is something of value which is on and could be used to produce something. The cash you want, it could be used for your paying your tuition fee. A home provides shelter, and this could be rented out to generate income. So this is asset, something which has got a very high value. And in the case of liability, which is the opposite of asset, this is a debt or something you owe. You are obliged to pay back. So this is a liability. Many people borrow money to buy homes. In this case, the home is an asset, but the mortgage is the liability, because you are liable to pay back the money that you have borrowed. The net worth is asset value minus how much you own. That is asset minus liability, that is the net worth. And the bank's balance sheet would operate in the much same way. Asset would be there, liability would be there, and net worth should be calculated by subtracting your liability from your asset. A bank's net worth is referred to as a bank capital. A bank has assets such as held in its walls, and that is bank would hold a Federal Reserve Bank, I mean hold at Federal Reserve Bank. Here we are referring to the US economy. That is why the Federal Reserve Bank is taken. In the case of India, it is the Reserve Bank of India. And the loans that are made to customers, bonds, etc. Now here this gives you a very simple example of your liabilities, asset, net worth, etc. Here you can see that the loans, US government securities and reserve, it come under assets, and which will add up to $5 plus $4 plus $2. And in the case of liabilities and net worth, you can see that your deposit is your liability, because you are, whether it is fixed deposit or whatever, a saving deposit or whatever it may be, if it is deposit, that means that the bank is liable to pay back in the future date to the person who, or the entity who has created the deposit. So it is a liability, it is coming under the liability part. It is coming to around $10 million. Then net worth means your asset minus liability, which is equal to 1 million. Okay. For a bank, the assets are the financial instruments that either the bank is holding, or those instruments where other parties owe money to the bank, like loans made by the bank and the US government securities such as US Treasury bonds purchased by the bank, etc. Don't get confused with the term US, because in this case we are taking the example of US economy. You can definitely take the example of Indian economy. You can if you're taking the example of Indian economy, you can say that it is Indian government securities, or the government issued the securities issued by the Indian government, the treasury bonds purchased by the bank, which is issued by the Indian government, etc. So the liabilities are actually what the bank owes to others, and specifically speaking, the bank owes any deposit which is made in the bank to those who have made them. The net worth or equity of the bank is total asset minus liabilities, which is something which we have already discussed. Net worth is included on liabilities side to have the T account balance to zero. For a healthy business, net worth should be positive, and for a bankrupt firm, net worth would be negative, because you are subtracting your liability from your asset, and if it is coming to positive, that means that there is some kind of progress, and if it is coming to negative, that means that you are actually in a bankrupt stage. In either case, on a bank's T account, assets will always equal liabilities plus net worth. Okay. And when bank customers deposit money into a checking account, saving account, or a certificate deposit, the bank would view consider these deposits as liabilities. After all, we can see that the bank owes these depositors to the customers, and these deposits to their customers. And as a result of the same, banks are obliged to return these funds when customers wish to withdraw the money. In the example shown here, the Safe and Secure Bank holds $10 million in deposits. You have already seen this. Deposit is $10 million because this is liability in this liability is actually, and here asset is coming it to be more than liabilities. As a result, the net worth is positive, which is 1 million. Okay, that's all for today. Please like, share, and subscribe to this channel for more videos. And thank you for watching. I welcome you to my Telegram group and Telegram channel to share your concerns, discuss your doubts, etc. There are plenty now. So if you come to join the group as well as the channel, that will be good for you. That will be good for you in the sense that you can discuss your problems with relate to the subject. You will be able to clarify your doubts. That's all. I'll be providing the links of the same in the description box so that it will be easy for you to join. So that's all. Thank you for watching.